Hey, everybody. Welcome to the Profit Strategies Podcast. I'm Tom Gentile. With me again today is Chris Johnson. Chris, good afternoon.
Hey, Tom. Hey, it's great to be with you, Tom. Ready to talk stocks, ready to talk investing, everything with you. This is great.
Awesome. Guys, our podcast, our plan and really the theme of our podcast is really going against conventional wisdom of trading and investing. And in this particular podcast, we try to knock out two themes, and one of them is more of a higher level theme, and one's more focused on today. And so what we want to talk about today is sacrifice. What do you sacrifice in order to get to your goal of trading? And sacrifices are in both time and money. We'll get to that. I want to share some numbers with you, too. In my age group, we'll talk about that. Also, definitely want to talk about the market ahead of election and what's on the radar screens in terms of what Chris and I are looking at ahead of the election. So, Chris, how was your week?
Oh, my gosh. It was wonderful, Tom. Had a great weekend, got relaxed, as all of us need to do over the weekend, and then came back out swinging, trying to... Not trying, but, figuring out this market. I think we all need one of those sacrifices is we all need, you mentioned time, we need to make sure we get rest when we're doing this as well. Keep your head straight.
Yeah. I mean, I'm kind of making a personal goal, and my wife is really slamming me on this, is to put the iPhone down at least one day during the Saturday and Sunday. Just put the phone down and cover it up. And so, and go out and take walks and just, get yourself almost like a reboot, a brain reboot is what we're looking to do.
Need it.
But hey, I mean, we got a great podcast today, and let's start off talking about sacrifice, because last week we were talking about, if all of you can remember in our last podcast, we were talking about kind of surveying the land and what do you want out of trading. And, in order to get something, you have to give something with everything in life. And in order to really get what you want out of trading, there has to be some sacrifices made. And so I want you to think about for a moment, what you sacrifice in terms of time and money. And so I believe that those are the two things that a person is going to sacrifice to be a great trader or a consistently good trader. And that's time and money, not necessarily in that order. But, you think about this. The cost of an education is high here in the States. You go to a good university, it's not cheap. But think about the cost of education in the world of trading. And if you think that that is high in terms of time and money, then try the cost of ignorance. I've seen the cost of ignorance. People pay a lot more in the cost of ignorance than in the cost of in the cost of knowledge and learning how to do this successfully. And this is, like I said, it's not only in trading, but it's in all walks of life. Everything that I've ever done where I did not study, I went right to, I didn't study the land, I didn't get knowledge, or I didn't find somebody who had knowledge, I somehow ended up losing money on that transaction, whatever that was. Whether it was a private investment where I didn't do my diligence properly on the person or company I was investing in, I've done that. Whether it was, a car or a house or whatever maybe I was buying, that was that, that too. Relationships are the same way, Chris. If you don't
Absolutely,
do your diligence
Tom.
on your potential girlfriend, boyfriend, spouse, that could end up being a costly investment too.
Well, it sounds like you did yours with your wife, Tom, because she's directing you in the right direction for your sanity on the weekends, at least.
Yeah.
And I know her, so I can say that she's a wonderful woman. And yeah, you're exactly right. Know what you're getting into.
Yeah, she's the boss.
Mm-hmm.
But when we talk about sacrifice, let's talk about sacrifice of money first. And I want to throw some figures out here for all of you that are listening to the podcast. So think about this. Now, I'm 55. Okay, I'm right in the middle. I'm double nickels, and I decided to go to the Federal Reserve and look at some data on the Federal Reserve in terms of what an average person in their 50s looks like in terms of income, what they're saving, what their net worth is, and what their total debt is. All right, because a lot of that has to do with trying to find money to trade if you're just getting involved in this. So, Chris, I'm 55. you're either going to be, at the money, out of the money, or in the money in terms of age with me compared to me.
I am just a couple of years, let's call it out of the money. 3 years, 52. So right
Okay.
there.
All right. We're both in our 50s. The average income, and these are pretty interesting numbers that are coming right out of the Federal Reserve, and this is data from the Fed. Average income is just over $51,000 a year for a person, not a couple, a person in their 50s. What's interesting is the savings rates lately have started going up, and savings for people in their 50s. Now, you should be saving more in your 50s. People, when they get in their 50s, they start getting nervous. They start realizing mortality, whether it's physical or whatever. You start realizing, wait a minute. All right, I don't. My kids are out of college. I don't have any more excuses for not saving money, and at the savings rate now for 50s, as of now, like this year, 2020, is close to 10%. We're almost at double digits, which is great. That's great, but you're in your 50s. If you're looking to retire at 65, you got to start saving at a double digit rate. Medium net worth. All right. What does a net worth look like for someone who's in their 50s? Well, it's actually just over $153,000. Now, here's the thing: total debt, $80,000. And that total debt number is actually, if you go from your 40s to your 50s, what happens is your average income is peaking. Most people peak between their mid 40s and mid 50s in terms of average income from the data we're seeing. Savings rates go up, net worth goes up, and debt starts to go down. Because when you're in your 30s and 40s, that's when your debt should be the highest. Okay, that's why a lot of people take out life insurance policies in their 30s and even in their 40s, because the last thing they want to do is leave their family with a mountain of debt if something would happen to them. And then as you get into your 50s and 60s, your life insurance policies either go away or they go down, drastically, because you don't have as much debt and you have more net worth, et cetera. All right, where am I going with all this? Where I'm going
Well,
with this is,
typically also throw that out there, Tom, is it your expenses go down too, children, et cetera, et cetera. So,
yeah,
this is great that we can start to save more but you're nailing it on the head here. It's why try to do it late instead of trying to do it earlier and taking that compounding effect. Everybody needs to sit down and have that talk with their kids when they're 18, where they say, hey, if you just save $100 a month for the next 20 years, you're done. But anyhow, I digress. Sorry about that.
18, start doing it
Yeah.
before they're even teenagers.
Well,
My
then it's
wife,
your money, Tom.
God
It's
bless
not
her.
their money.
My wife, as she was going to the grocery stores with the kids, when they come up to the register and you have all the candy and all the stuff in
Hmm.
the impulse items, they go, I want this, I want that, I want this, I want that. And my wife would always say no, but she wouldn't just say no. She'd say, do you know why you don't buy from over here? Let me show you. And then she would take them back to the candy aisle and show them the bulk and say, how many pieces of candy are in this bag? All right, now how much was that one Kit Kat bar at the front? And then she'd show them how to actually look at the label and look at the item, the cost per item or cost per pound or cost. And my kids learned this really early. So, she taught them very well at an early age to do that. But, if you're in your 50s right now and you're in this stats, you're in somewhere in the stats, either a little to the right, a little to the left, whatever it is, and you're looking to trade and you're trying to figure out, all right, where do I find money to trade with? Because I want to keep reducing my debt, et cetera. Here's three things. I wrote a whole article on this some time ago. I'm going to have to crack it open and update it, but sacrificing things to trade. And this is even going to be more so for people that are in their 30s and 40s than in their 50s. All right. So you don't think it's time to shut the podcast off because you're not in the age group I'm in, because this is a very good lesson that we're going to teach you right now. There are three things that are impulses that become really habits, that if you break them or bend them slightly, it will put $5,000 in your pocket every year. $5,000 for doing three simple little things. Number one, Starbucks lattes. I got a nephew who constantly goes to Starbucks or Dunkin' Donuts every day, gets the large latte. He's paying $5 a day for this thing. Doesn't think twice about it. Right now, he makes good money, But I mean, he spends it. He spends it too. $5 a day, that's $25 a week. Now I'm talking about a 5-day week. All right. But this kid probably goes every day. But let's just talk about the work week. $5 a day, $25 a week. That's $100 a month. That's $1,200 a year in lattes. That if you were to burn the coffee on the big pot, which any of you that are 30 years or under probably don't even know what I'm talking about. You're saying, oh, you mean the Keurig machine, right, Tom? Okay, yes, the Keurig machine. But if you were to do that instead, and buy those things in bulk at Costco or Sam's or whatever, you're going to save yourself maybe not $1,200 a year because you got to replace the $5 latte with the 25-cent Keurig cup or 20-cent Keurig cup, but you're saving 90% of that money's going right back in your pocket. Here's another one. My brother-in-law, he works. He goes to work every day. You know what else he does? He eats out every day. When he gets his lunch break, he goes across the street. He eats out every day. Now, I don't know what he pays, but let's just say he pays an average of $10 for his lunch because that's for a decent lunch. I mean, yeah, you could go to McDonald's or you could go to Burger King or one of the fast food restaurants, pay a little bit less. But I don't know someone that goes to McDonald's every single day and has lunch because that would get old on the taste buds real soon. So you get a little variety. $10 a day lunch, $5. That could become $50 to $60 a week. That's $200 to $240 a month. That's $2,800 a year, Chris, in lunches that you could brown bag it. Again, I find it quite interesting, and I'm only talking about my family here, where the ones who have money a lot of times just don't spend it on frivolous things, and the ones who don't actually do spend on frivolous things. That's $2,800 a year. Cigarettes. This is the third one. Okay, so we got our lattes, we got our out lunches, which we can brown bag. You got to put 90% of that cash right back in your pocket there. Cigarettes. There's no real replacement, right? I mean, if you're not going to smoke, you buy the nicotine gum, you're still paying. If you're not going to smoke, you put the vaping, that causes damage too, as we now know. But I mean, think about it. The average price of cigarettes in Florida, for instance, I did my homework on this, a little less than $6 a pack. Well, on a 5-day week, and you should really put 7 on that because no one takes the weekend off not to smoke if they smoke. If you're smoking a pack of cigarettes a day, you're doing it every day. But I did this on a 5-day week. $30 a week, $120 a month, $1,440 a year. Okay, add all those three things up. You're basically saving $5,500 a year to invest or trade. Now take $500 of that $55 and do a replacement. Instead of the Starbucks, get the Keurig cup. Instead of the lunch out, brown bag it. And you still got $5,000 in your pocket that you didn't have the year before, Chris.
It's easy. You hate to say it because we all say it's easy, but then you feel like it's hard. But it's easy. You target a few things and you're done, and you stick to what you changed. That's the most important thing, Tom.
And Chris, you said it too. You were telling me right before we got started, we were kind of talking a little bit here, and you were telling me something about Dish Network.
You know what? Yeah, it's DirecTV and Dish Network, which I'm actually short right now, Dish Network, because of my experience here. And it's truly because of my experience. I talk about doing that walk down Main Street when I invest. But I sat around and realized that I wasn't watching as much television as I thought I was, Tom. And I watch a couple things like you. Everybody's got their creature comfort shows, whether it's CNBC during the day for me, or we don't want to get into my guilty pleasure shows because they're kind of embarrassing. But, let's just say they're Real Housewives type of stuff. But anyhow, I digress. I sat down and started looking at my monthly statement because I charge everything onto one credit card so I can see everything in one spot. And I'll be darned, Tom. You look at that DirecTV, and first it starts out at $125 a month, and then it goes up, and I add a couple sports tickets and that type of thing. And I'm paying $250 for DirecTV alone. $250 a month. So, I went after the big things. It was those things that were, look at this, I don't use it. And sure, my replacement in this case was YouTube television, which was $60. I'm paying $60 a month, but I'm splitting it with my kids now. So each of us
Yeah.
are throwing $20 in the pot. So I'm trying to make sure that I keep them honest there. But that, along with going in with to Amazon and checking all those little subscriptions that you add just to watch a show or something, and then a month later they're still charging you. All of a sudden, I've freed up somewhere around $400 to $500 a month, and I'm not feeling it at all now. So
Yeah, and you know what? I wanted to mention something too, Chris. These little
yeah,
changes you do, you say they're easy, and they are, but they really are easy after about the first month, because the first
oh
month you're
yeah,
going to feel it. Especially if you're, your first month you're going to feel it with coffee, you're going to feel it with lunch. It's a little bit of extra work, but everything that's worth something does take a little extra work. I mean,
absolutely.
you said the same thing. I mean, I got the same issue with my family right now with TV. Is that we got everything. We've got cable. We've got YouTube. We've got Netflix. We've got Hulu, Zulu,
Amazon
Dulu. I don't know
Prime,
all
yeah,
of these things.
baby.
I mean, I'm probably spending $500 a month on entertainment, Disney Plus. And so my
Mm-hmm.
wife and I were talking about this recently. We was like, we got to cut some of this stuff out because we just simply aren't using it. So there's some
There's not
things
enough
that can
hours
be
in the day.
replaced.
Yeah,
And then, yeah, there's some things you can replace. And then there's some things that you can just drop because you have it and you're just not using it. And so
strike it,
that's all I want to
get
say
it out.
about sacrificing money. I mean, sacrificing time is a little different because if you want to be good at something, obviously you got to commit some time to it. And, keep in mind, Chris and I have been doing this. I've been doing this longer than I haven't, which basically means I've been doing this for over half my life now as a trader. And so I've got a lot of time into it. I've got a lot of experience. When I started out, this is the part that I actually did right when I started out, was that I was devoting 15 to 30 minutes a day. All right, not including weekends, but 15 to 30 minutes a day I was devoting to studying the markets and starting to understand how things work. And I think the very first thing that you have to look at as a trader is ask yourself a couple questions, because this is going to help get you to the time area quicker. All right. Do you want to be a directional trader, or do you want to be non-directional? Do you want to be an investor? If you can be an investor, don't really worry about the short side so much. Look at long-term investment purchases. But if you're going to get into that trading lifestyle where you're 30 days or less, you can make money on the downside too. So
Oh yeah.
directional or non-directional, maybe both. What's your time frame going to look like? Is it going to be 30 days, 30-day trades? Are you want to trade the weekly stuff? Do you want a day trade? I can tell you this: the shorter your time frame is as a trader, the more you have to study. So think about that one real hard before you answer it. If you work 60 hours a week, it's going to be impossible to be a day trader too. Something's going to screw up. And in a lot of cases, it might be both. I know a guy who worked for a big company, tried to be a day trader, and guess what happened to him? He half, everything, and he lost both his trading account. He lost his trading account and his job because you can't do them
uh,
both well. So
no.
think about that. What in terms of sacrifice? Your sacrifice of time means a time and knowledge and a time of commitment to what you're doing. So if you stay in the 30-day realm or more, you can commit not that much time to the trades. You look at everybody looks at their account every day. Who doesn't? But you don't have to really focus and analyze everything. Maybe once or twice a week, you're looking at opportunities.
Hey Tom, let's go back to something you said a little earlier.
Sure.
Losses. Losses. Everybody's got them, right? I don't know. Do you know any traders who don't have them?
No, I don't.
No. And you mentioned something else, and I'm going somewhere with this, something that I try to tell people all the time. The tuition, you brought up the key word, tuition. We talk about tuition, whether it's going for school and due diligence, whether it's, again, checking out a business or a person that you're going to start dating. One of the things I think people overlook is when we get losses, when we're traders or when we're investors, we tend to kind of stomp our feet and curse, the sky a little bit, or curse the market gods, whatever it is, and then move on and say, I'm going to go on to the next opportunity. Moving on to the next opportunity is always the right thing to do because you can't sit there and languish in those losses. But if you don't take that time which you just mentioned, to learn, to educate yourself, and rip apart or dissect. I call them postmortems of my losers. They're dead on the table. And like Quincy, you remember that show, right? I think we're both old
Mm-hmm.
enough to remember Quincy. The Quincy sits there and figures out what happened to this person that's laying in front. You have to figure out what happened to that loss so that you don't repeat that mistake. And I think too many people just scratch it up to, okay, it's a loss. I'm going to go on and instead tear it apart and say, hey, what was my time frame? What did I, if you're traded an option, what option did I buy? What kind of stock did I buy? Did I look at the technicals? Did I ignore management? Figure these things out every single time. And man, your losses turn into a tuition for you to be a better trader.
Right, 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 right.
Yeah. And we're
So
not going to avoid the
that being
losses.
said,
So, yeah.
yeah, that being said, Chris, let's talk about election. So
Yes.
we're just 2 weeks away. Um,
Whew.
what do you see?
Well, you know what? Everybody's got the word uncertainty in their mind. When you look at what's happened with you and I both watched the VIX, the volatility index, and when you look at what happened with the VIX over the last month, the SIBO reported that the futures are going, we've seen 25% more in futures trading on the VIX. So everybody's betting on certainty because that's what they're seeing either real time in front of them on the television, in the media, in the polls, and the polls are starting to tilt a little more. But regardless, they're worrying about uncertainty. And the market's biggest enemy is uncertainty. And I am seeing, I think a situation where everybody's overplaying this a bit. Not that I think there's going to be a landslide one way or the other on the election, but instead, I think there are some clear winners out there for the market that you just sit there and say, okay, well, this is what's going to go regardless of who wins. But man, I mean, can you remember 20 or 2000, right?
Yeah,
We both traded our way through 2000 and it was a bumpy ride. I think we're getting set for that. And I wish I kind of had that feeling like I think a lot of traders and a lot of people that are just sitting at home that I wish the politicians would just kind of give us a little bit of a break here and make things a little clear as far as they could, whether it's fiscal stimulus, whether it's how we're going after the pandemic. There's a lot of loose ends in this market right now. What do you think?
I completely agree with you. We've just had such a melt up. Although the to play devil's advocate, where else do you put your money? When
Phew.
interest rates are at zero. I was talking to my brother on the phone yesterday, and he's selling a house, and he is looking to put the money into some. And this is a house he's owned for a while. Somebody wants it, and he wants to do something with that money. He goes, I'm afraid to put it in the stock market right now. And I said, why? He goes, because look at what it's done so far this year. He goes, I'm afraid my timing is going to be wrong. What can I do outside of the market? I said, you ever looked at real estate? Take that money out of that house, do a 1031 exchange, put it back into another one. And he found a piece of property actually close to my mother's house. And he said, well, he goes, it's overpriced right now. Everything's overpriced. That's why I'm selling, because I'm getting a great price for my house. And I said, well, if you do the work and I did the math with him on the phone, and I said, look at what a 30-year mortgage is going right now, Mike. You got great credit. I said, you can actually put 20% in that house, finance the rest. You got a mortgage payment, add taxes to that, and you can double that number. And that's what the rents are going for right now in that neighborhood. And it took him,
Yep.
he's like, wow, okay, now I know why these are so expensive. And so that's something he's looking at. But you and I love the liquidity of the stock market because we can get in and out instantaneously. And so, what are you looking at right now as we get to the end of this podcast, as we are 2 weeks from the election? What looks good in your mind?
You know what? There's one area of the market that I can't stay away from, and that is the clean energy sector. When you look at the ICLN, which is the ETF that trades a lot of these companies, it's just been beaten down here over the last few days. And why not? Because it was overbought. I mean, everybody's been crowding into this trade. And Tom, I think we can all agree that nobody's going to start burning more coal. We're not going to start using more and more oil. Everything is moving towards these alternatives right now. So it's that bet that kind of looks right over the election and any
Yeah,
uncertainty
yeah.
that's gonna happen. I think this is just and we're still in the beginning phases. When you look at that ETF, it's returned 3 times what the S&P 500 has. It's doubled the NASDAQ 100. This is the new technology. We're always looking for that new edge in the market, that new little nugget. This is it. I mean, this
Yeah.
is everything from the charging of the cars to hydrogen power, all of this. This is it, Tom. I mean, this is new. Microsoft and Apple in 1998. This is what we're looking at. And I think this is every time I get a chance to buy some of these stocks a little bit lower. And as I mentioned, they've just come down 20% in the last 2 days. I try to jump on them. I think it's a
Yeah.
great thing to be looking forward to. How about you? What's
All
what's your
right.
favorite
Well, you know what?
either sector or stock?
I'm gonna give you the 5 stocks that I talked about last week. I'm sticking with them, and I'll tell you where they. I mean, I actually been talking about them for the month. So, Papa John's Pizza. Okay.
Yep.
I figured, pizza, Starbucks, not drinking the lattes, but I'm drinking the stock in the form of a bullish options position. And then of course, Philip Morris, which is the cigarette portion of my pre-election stocks. So how are they doing? All right. For the month, Papa John's is actually on its lows for the month. The last 3 days, it's been sitting around 77. So, I'm still with that one. It had a big move down earlier in the week and dropped from the low 80s into the high 70s. And again, we'll see where this goes. And I still have another looks like a week and a half on this one, as we maybe even more depending on the outcome of the election, because this could be a 2 or 3 week. But that's
Oh yeah.
Papa John's Pizza. Starbucks is actually up for the month. In fact, it's not at its highs, but it's off its lows. So it's gone from mid 80s to high 80s. Since I first started talking about it. And then Philip Morris is pretty much where it was. It went up and came right back down since I first started talking about it. The other two that I'm really big on, and I've been big on this throughout the year, but just equally as much as we go through the next couple of weeks, is GLD, which is the ETF for gold.
Mm-hmm.
Right, that's been holding its own. Again, this is one that has been for the month, has been right around floating around the 177 area, and it's at 177 or 178 and change today. But it was as high as 181 just a couple of days ago. So that one. But my big winner so far for the month that I've been talking about, Bitcoin. So Bitcoin, I've been at this one since it was in the nines. I'm talking about most recently in the nines. For those of you that don't know, I was mining Bitcoin back in 2013. So I still have those coins. I don't plan on selling them. I've been adding to my positions, but my most recent add was at around the 9,500, and then again around the 10,500 area. Now I got to thank PayPal for what happened this week, because PayPal
Mm-hmm.
really pushed we pushed above 12,000. And that was early in the week. We pushed above 12,000 when PayPal announced that they would be allowing people to use Bitcoin and even buy and sell it through the PayPal site, using PayPal to do the purchases. And I mean, boom, it went up. And then not only did it pop, but it did a continuation. Typically these things have like a pop and drop, buy the rumor, sell the news, or buy the news and then sell the after news. But there is continued strength it was heading into the weekend with PayPal, or with Bitcoin now above 13,000. And so that's looking really good. And my ideas as far as resistance on this is 15 by the end of the year. Heck, we can go to 15 by the end of next week, possibly, but I think the trajectory isn't going to be that massive. But I do see 15,000 by year's end, and I look at Bitcoin as it's a tradable asset, but it's also a long-term. I think this is a long-term wealth builder's asset. I did a video on this early in the week before PayPal even came out and with this announcement. Early in the week, I did a video on the YouTube channel about my new revelations and my new price predictions for Bitcoin, not only just for the near term, but for the long term. And I'm talking like going out 10 years or so. So
Let me ask you something, and then I've got a couple individual names for you. Let me ask you something. Bitcoin versus gold, when we're talking about the value of the dollar going down as a hedge against that, because this comes up with my
there are billionaires right now, Chris, There are billionaires out there that are foregoing gold in place of Bitcoin as a digital asset in terms of uncertainty. I think
That's
it's a great. I
exactly
think it's great to have them both. Why stick all your eggs in one basket? When you can kind of spread that out. So,
correct. Correct.
all right,
Well, let
what do
me
you
give
got
you a
for
few
names?
names real quickly. All right,
Yeah.
let's start off. And there's a theme here because we're headed into the holiday season, and obviously people are going to continue to spend. Stitch Fix is one of those, and these have a pandemic slant to them as well. Stitch Fix did very well during the pandemic. SF5X, that's one that I have been on board for the entire year and love that one to continue moving higher. Like you, GLD. I like that as a hedge against a weakening dollar. And as soon as we get whatever fiscal stimulus is going to come our way, and who knows, if you believe it, it's going to be today. But I'm not sure I believe it. But gold is going to get even more of a rise out of that. So there are a couple others. SunPower from the alternative energy area. SPWR is a ticker symbol there. It has just been pulled down simply because it's been overbought. So that is one of the leaders there. And then I like as an alternative to Amazon. Amazon just got done with their Prime Days. The stock pulled back 8%, exactly as I'd kind of talked about on TD Ameritrade and a few other places. And it looks good with that at that 3,200 level. But Mercado Libre, ticker symbol MELI, is one that I like as a replacement for Amazon. I think there's a little more growth that's going to be happening in South America, and Mercado Libre is going to benefit from that. And then finally, Match Corporation, Match.com. Tom,
Oh,
people are lonely. People are lonely, Tom. And if you look at the stock, and it's funny to talk about this with people. And when they ask you, well, what kind of stocks are you talking about? And as soon as you bring up Match.com, you get a nod like, oh, I get that. I get that. I
Chris,
understand that people are lonely, and
I'm
the
with
stock's
you.
doubled over the last couple of months.
Let me tell you. You know what? I'm amazed I didn't think of that sooner. Spot on that one. And the reason I didn't think of it sooner, it's all clear to me now. One of my nephews, I think it was,
Mhm.
did a digital date. Had a digital date where he sent flowers and he sent a bottle of wine and he had a dinner pat. The same thing went to him and date, and they were FaceTiming
Wow.
as they had their wine and their stuff together with each other. And I was like, "Oh my gosh!" I laughed about it, but then I mean, how else are you going to be able to, stay COVID free? And that was at the time. This was a little while back, and I thought, what a cool idea. But you know what? I didn't think past that enough to capitalize on it. And you are giving out a great idea. So.
There you go.
All right. Well, let's close this thing up. Thanks again, Chris, for being part of the Profit Strategy podcast. And I think next week, what we'll do is we will wrap up our little session on goals of becoming a profitable trader. And I want to talk a little bit more of markets to trade and kind of how to break it all down. And more importantly, I think one of the most important things is taking responsibility, because that has a lot to do with becoming a successful trader. And so we'll wrap those up, and then maybe we'll get into a little bit more right before the markets, or right before we jump to the election, because
Whew.
we'll be at the weekend before next week, won't we?
Exactly. That'll be worth some hot takes right there, Tom. That'll definitely, I think we'll have a lot to talk about there.
Awesome. All right. Well, everybody have a great rest of your weekend. This is Tom Gentile signing off. We'll see you again next week. Bye now.